So in this video, we're going to go over problem 4/1a, and I'm not going to do the questions in the order because I think C is the most important part of this question, and which is journalizing the adjusting entries from the adjustments columns of the worksheet. So let's go over C. Okay. First, you have a look at the question. There is a trial balance of this company, and you have to make adjustments according to the other data below the trial balance. And number one, it says supplies on hand total 500. I think we did this earlier in other questions. So if you have a look at your worksheet trial balance, and then you can see that supplies is 1,250. Okay, 1,250. And then if you minus the used supplies, then 500 will be supplies on hand. So if you calculate the supplies used and we expense the supplies that we used for this quarter, and on the debit side you should have supplies expense 750, and you have to also credit supplies by the same amount on the credit side. Okay, so that's one. And two, depreciation is 680 per quarter. So quarter means 1/4. Okay, here, let me have red. Quarter means 1/4 over a year, right? So this data, the trial balance is from January 1st to March 31st. So January 1st to March 31st. Then you can see this is 1/4, right? So you don't have to make an adjustment. What I mean by that is you can just simply write down the exact amount that is written in the book, right? So depreciation expense on the debit side 680, and accumulated depreciation equipment by the same amount 680. And let's move on to 3. Interest accrued on 6-month note payable issued January 1st was 300. Okay, so what is going on here is that the note payable, we have to make, there is a note payable on the credit side. On the trial balance, if you see, the amount is $10,000. So this means that $10,000 of note payable, the accrued interest. So what it's saying is that January 1st. So you borrowed money from someone, and on the date January 1st, and it will last 6 months. Six what? Okay, 6 months. So it will end at what, May 31st or 30th? I think it's 31st. Anyways, so accrued means that the amount that has accrued so far. So well, 1 second. Okay. What's wrong with this? Anyways, accrued interest, that means the amount of the interest that has occurred since January 1st to March 31st is 300. Okay, then um, we can write interest expense on the debit side 300, all right, and interest payable 300 on the credit side. Okay, and insurance expires at the number four. Insurance expires at the rate of $200 per month. So a quarter, as I said earlier, has how many months in it? It has 3 months, right? So per month, so 200 per month. There's 3 months, so the total insurance expense would be 3 times 200, which is 600. So you have to debit insurance expense 600 and credit prepaid insurance by the same amount 600. And number five, service performed but unbilled at March 31st totaled $1,080. So um, services has already performed, then you have to recognize it as a service revenue. I said this many times during the TA session and in other videos, and you have to record 1080 on your credit as a service revenue. You have to recognize this as a service revenue because you have already performed the service. And on the other hand, on the debit side, account receivable by 1080. So that's pretty much about it for C. And then we're going to have a look at what we're supposed to do after trial balance. So after trial balance, you have to do an adjusting entries, and then you have to do an adjusted trial balance, and then with that adjusted trial balance, you make an income statement, and you make retained earning and a financial statement. Okay, so this I have written down. I have written down the trial balance exactly the same in your book. So on the left side, this is trial balance. So we have cash, AR, supplies. It's not adjusted, right? We calculated the supplies on hand was 500, and we had to expense it by the 750. So this is the before adjustment. Before adjustment trial balance. Now we have this adjustments here from C. So as you can, if you go back up, then we have all these accounts, supplies, expenses, supplies, depreciating expenses, accumulated depreciating expense, interest expense, interest payable, insurance expense, prepaid insurance, account receivable, service revenue, all these accounts that is not written down in your, it has to go through, it has to reflect it in your adjusted trial balance. So if you just write the adjustments, just simple, it's very simple. So account receivable, you have to make adjustment, you have to increase the account receivable debit on 1080, right? So debit 1080, okay, 1080, 1080. Supplies 750. It was supplies 750. And what, prepaid insurance 600. Prepaid insurance here 600. You have to do all the, basically you have to do everything just like this. So in your adjustment section of in your worksheet, you have to just write down the adjustment entries that you did before. So service revenue 1080 on the credit side. Supplies expense 750, from here. um, Depreciation expense 680 and accumulated depreciation equipment 680. Interest expense 300 and interest payable 300. Interest expense 300, interest payable 300. And then we have insurance expense by 600. Okay, insurance expense 600. We had 680, and we had 750 supplies expense. So we will have the total amount of 3,410 on the debit side, and the credit side. It balances, it equals, so we made no mistake. So with this information, with the adjustments and trial balance, we make an adjusted trial balance. What we do here is simply add the trial balance and adjustments together. So if you can see here, we have 1080 AR and 5920 of AR. So what we do is we add this together, and it will give us what? 7,000, right? 7,000. And we also had supplies 1,250 on the debit side, but we credited 750. So the balance will be 500 on the what? On your adjusted trial balance, 500. What about the prepaid insurance? Prepaid insurance was 2,400, but according to your data, some for 3 months it has passed, right? So we had calculated 200 times 3 months, so 600. So we used up some of our current asset. Prepaid insurance is current asset. So we will have what, 1,800 of prepaid insurance left in our adjusted trial balance. Okay, the same thing. Service revenue was 10,200 before adjustment, but after adjustment we have to add service revenue 1,080. So if we do that, you can see that the service revenue will equal 11,280. Same thing goes here. Supplies expense. Wait. So if there was no supplies expense before, but we have debited, so we have the new item here, supplies expense 750. And same thing for depreciation, and same thing for accumulated depreciation. And we did not calculate, after adjustment there should be interest expense, interest payable, and insurance expense, and this relate with what? Prepaid insurance in your asset, right? Okay. Alright, so the balance on your debit side and credit side should equal. The total amount is 43,610. And after we making the adjusted trial balance, what we do is we write an income statement. So in your trial balance, see if you can determine whether these accounts are a financial position item or income statement item. That is one of the most important factor that you have to do in your exam. So what is cash? Cash is an asset, current asset. What is AR? AR is a current asset. Okay. Supplies, yes, asset. Prepaid insurance, asset. Equipment, asset. Okay, so these are assets, and What is not payable is a liability, is a financial position item. Account payable, liability again. Share, so these are your liabilities. And what's share capital ordinary? Share capital ordinary goes into the equity. Dividends, equity. So these two are your equity. And this is your liability. And this is your asset. So these items will not appear, will not appear in income statement, right? Then what goes into the income statement? Simply speaking, service revenue, starting from service revenue and all the expenses. Okay, so service revenue is an what income statement item, and salaries and wages expenses, travel expenses, rent expenses, miscellaneous expenses, they are all related to the income statement item. Supplies expenses also, and depreciation expense. Here, we have new asset account, accumulated depreciation equipment. This is your what? This is your financial statement item. Under equipment, you have to write accumulated depreciation equipment. And you also have this interest payable, and this goes into your financial statement again also. And all the other expenses will go into your income statement. So okay, so income statement, let me write this. Income statement should include revenue and then expenses. And maybe you have learned some COGS today, and maybe you have learned what uh, per, what is it called, sales discount. And what else? And there should be more in here, revenue section. Anyways, so basically for the first exam, you should remember that revenue and expenses are included in your income statement. So we start from the service revenue. Oh, this is for your worksheet. So we have service revenue 11,280 here. Where is our trial balance here? Service revenue here 11,280, and then we write all the expenses, and it will give us 7,300 for all the expenses on the debit side, and it will give us 11,200 of service revenue on the credit side, and the difference between the revenue and expense will become net income. Okay, we have net income of 3,980, and this is what net gain, because we have more revenue than the expenses. So the total will be 11,280 on the credit and 11,280 on the debit side. So your statement of financial position, it will include all the financial statement accounts that I have here. Again, all the financial statement accounts, cash, AR, supplies, prepaid insurance, equipment, share for liability, no payable, account payable, share capital for equity, share capital ordinary, and dividends. And here depreciation, accumulated depreciation equipment and interest payable should be also included in your financial position. So if we do that, if you just accumulate all the asset financial statement accounts in your adjusted trial balance, then we will get this number, 3,603 36,310. We have cash, we have account receivable, supplies, prepaid insurance, equipment, and note payable is liability, so it should be on the credit side. Account payable also in the credit side, share capital ordinary on the credit side, dividends on the debit side because it's dividend out, um, and accumulated depreciation equipment is 680, interest payable 300, and then we have to add net income, which will be your retained earning, and which is 3,900 that we have calculated from your income statement. So we have to actually go through income statement and then retained earnings statement and then financial position, financial statement. This is the order of doing this accounting. So why? Because in retained earnings statement, the retained earning may be different from your what you have calculated in your income statement. You'll later learn this maybe in your next in the intermediate accounting. So but in this section in right now you can just remember that the net income is the retained earning. Anyways, we'll go to the B and start writing our income statement. So the revenue was 11,280, and all the expenses together it will be 7,300, and minus revenue minus expense will give us net income. So we take this net income into our retained earning statement. The beginning retained earning was 0, so there's 0. We have to add net income, and then we have to less dividend by 600, and our retained earning will be 3,380. I should note that maybe the retained earning in here, this part is wrong because dividends here is separated, so net income is the right word to use here. Okay. Anyways, let's move on to the statement of financial position. We have 15,000 on the equipment, less accumulated depreciation equipment, 680, and it will give us this total amount of equipment. And our current asset, we can just simply copy all the numbers from trial balance, adjusted trial balance, and we have these numbers. In cash, we have this number, and then if we add these two, it will give us 35,030. And as you know, asset should equal equity plus liability. So let's move on to equity and liability to see if the numbers we got on the asset is correct. So share capital ordinary worth $14,000. Retained earning, we have calculated that it was 3,380 from our retained earning statement, right? So it will give us the total equity of 17,380. And if you see the liability side, we had note payable, we had account payable, interest payable. These numbers are all just copied from adjust your trial balance. So the total amount of the liability would be 17,650, and if we add the equity and liability together, then the total equity and liability should be 35,030, and this equals the amount of asset. So we have to journalize the closing entries. So for service here for closing entries, what you have to remember is that we're trying to make all the temporary accounts equal zero, right? And what are temporary accounts? There are service revenue, there is expenses, the retained earning, not retained earnings, dividends. So here, revenue, expenses, dividends. We have to make this accounts equal zero and balance zero in the end of our closing entries. So we make an income summary account, and we debit service revenue and then we credit income summary on the credit side. So this closing entries will give us zero on the balance. On that for next. So okay, I think I did this in the previous video, so I will not explain how to do this. So service revenue would be this number. We got this from our income statement. And then we send this to the income summary by the same amount. So service revenue, if you see the T account, there should be balance of 1,280, and by sending this into the income summary, then we will have zero in balance, and we can start over next quarter. Okay, the same thing goes on with the income summary for the expenses. And you have to remember that we have to make adjustments for the retained earnings, because there is a gap between your revenue and expenses. There's a gap, right? We have to make this gap an adjust so that the income summary will balance zero in the end. Wait, not zero, should equal the same. So for income summary, 11,280, and for your income summary, 7,300 on the debit side, and 3,980 here, and retained earning of 600, and it will give us what? The same amount in the end. Okay, if you don't know the concept, please do come to our TA session. It will be held 5th October 7 through 9 in the evening. So, and that's it for question 4/1A. I think I did a terrible job here explaining, because this question is quite long, and this kind of question you should be expecting in your exam. So here we did adjusting entries is one of the most important. This is most important in this question. So you have to know how to make adjustments, and when the worksheet, when the trial balance before adjustment is given, you should know how to do an adjusting entries, and then you should know how to you should know how to make an adjusted trial balance with your adjustments. Here your adjusted trial balance, and you should you should know how to you should know what accounts goes into the income statement and what accounts goes into your financial statement account. Okay, and you should know how to write income statement, and you should also know how to you should also know how to write retained earnings statement, and you should also know how to write statement of financial position. um, and that is pretty much about it for today. um, if you have any questions regarding this assignment, please come to the TA session. I'll be there from 7 to 9. Thank you.